welcome to my YouTube channel. So in this video today, we are going to be discussing my Forex trading plan. And we're just going to basically touch on like how that helped me. And I'm also going to give you guys insights on my own trading plan. I'm going to read it out to you guys so you guys know exactly how to formulate your own plan, because we all know as a beginner trader, you never want to just go into the trading or Forex market blindsided, blow your account, then wonder like, what did I do wrong? So I'm going to outline how I just learned from my mistakes, everything that I do every day, trying to stick to my rules, trying to stick to my plan as a Forex trader. And it is hard. You have to be really disciplined in order to know that, hey, you're not supposed to be trading this time, or, hey, this is how you blew your account last time. Don't do this again. So it's just little things like that that are really going to help you to be successful in the trading market. So let's go ahead and discuss my first rule. I'm going to pull it up here on my laptop so you guys can see. Well, not on my laptop, but let me see here. All right, so my first trading plan, so you guys can basically get an understanding of what I do every day as a Forex trader, day in the life of a trader. The first thing I put here is wait for a good setup before placing a trade. And I'm going to explain it as well as to why I have that rule. When I used to trade, I used to just literally trade whenever I saw the market going up. If I saw the candlestick forming this trend up, I would literally just place a trade and go up there. And I would look at it and be like, wow, that was a stupid decision, because the market was not the actual trend. It wasn't just going up. So I was making like rash decisions. I was doing something. I was just being very, very foolish. So that's why I really made that rule there. Wait for a good setup before placing a trade. It's so important, because that literally made me blow my account every time. Sometimes I'll put $50, $100, and it will be blown. So within a matter of minutes, because the market, it's not your friend. It's going to literally blow your account. Don't think that it's there for you. The market is a place you go to if you know the strategies and if you know how to basically determine what the trend is. I think that's when it'll be like, okay, Forex is a little bit more likable at this point. But if you're going into the market lost and expecting and demanding and thinking the market's going to be on your side and try to make sure you get all your wins, it's not a job, it's a business. So if you don't know that, if you can't create your trading plan, it's really going to be tough and difficult. So I just wanted to put that out there. All right, so now we're getting into my second rule here, is trade support and resistance only. That is a strategy that I think I got from YouTube, and then I did some research on it. I did back testing on it, and I realized like, wow, this it's gonna help me with my entry point, because I'm always so late on my entry. I'm always getting into a trade, staying in drawdown for like an hour or so, then having to wait for the market to reverse and go back to the trend that, it's not that I'm putting the wrong trade in. It's not that my analysis is wrong, like the market wasn't actually gonna go up. It's just my timing. Entry time is everything. So when I'll place a trade, I'll literally be in drawdown because I got in at the wrong time. And with support and resistance on a 5 minute, it's going to tell you, hey, the market is going up this trend. Look at it, and I didn't know anything about support and resistance. I would just literally go on my hourly and place a trade in, and I'll have the worst entries, and it would always lead into me blowing my account. I still have horrible experiences, and I still kind of do that as well. I still have bad entry points as well. So I'm going to admit that that was pretty bum on my end. So yeah, I'm working on that. My third rule is look at the 5 minute and 1 hour before placing a trade. I can't stress that enough. 5 minute is what I used to do my entry. I look at the 5 minute, I see what's going on, go back onto my 1 hour, and then I see, okay, yeah, this is going this direction. I feel secure. I'm confident. Place my trade. Second thing is always trade on TradingView before placing a trade on your phone. So there's kind of two ways about this. I started off trading on my phone, and I didn't really have too much of an issue doing that. And then there's some people that say TradingView gives you the overall look on it and what the market is doing. And I agree. TradingView is something that I really, really want to start using. And, I've started using it actually. So, because it really helps me get an overall picture of what is the market doing. When you're on your phone, you're limited as to what you can see on the 4 hour, on the daily. So, but when you go to your desktop, of course, you can see that overview, or even on your laptop. So, am I trading? My next rule here is trade at 8:30 to 3:30 p.m. The reason I say 8:30 is because the market right around 8:30 is when you see big moves with the news. I don't know if anyone that does trading in the New York session, if you literally trade at 8:30 or like a couple of minutes before 8:30, you will literally see how the news affects the market. So for instance, there was one day I was trading NAS, and I knew the market was going to go up, and I was right. And I woke up right at 8:30. I placed a trade for like a 0.002, and literally within minutes, my account said like $50 in profit already. I was like, wow, that's amazing. So if you really know, if you've been monitoring the market every day, every week, and news is going to come on at 8:30, and you literally, if you're in the right spot at the right position, you will literally profit from that, because literally it's amazing. It's amazing what the market can do at 8:30. And the reason why I say 3:30, end at 3:30 is because I have a life. I have things I have to do. I can't literally sit there all day and look at charts and see what this is going to happen. This is that. So it really just helps me out when it comes to knowing when to get out the market. I don't like trading all day, 24 hours. And the New York session is only from 8 to 4. So I don't want to do anything past 4 o'clock. 5 o'clock is when the market will kind of just slow down. And I think with indices, they kind of shut down as well. Like no tradings happen after that, from what I noticed. But yeah, I like to get out right at 3:30 because I want to take my profits and go. Sometimes if I get out earlier at 3, that's fine. But for right now, I'm keeping it at 8:30 to 3:30. I don't like trading at any other time, any other day, Monday through Friday. It's just 8:30 to 3:30 because that's how I've made most of my profits. I've made most of my money trading New York session. So that's why I have a list of pairs that I have here. Must trade NAS and US 30 and XAU. Again, as you know, as a new trader, beginner Forex trader, you don't want to be in all these kind of pairs and figuring out what GU is going to do, figuring out what Euro is going to do, figuring out what Australian dollar is going to do. Stick to the pairs that you know how they move. You feel comfortable placing a trade with that, and just stick with that, literally. Next rule I placed is be patient always. It's important to be patient because you don't want to rush your Forex journey. The Forex journey is a Forex journey for a reason. It's a learning process. It's going to help you know your mistakes, know what you're doing right. So all of that matters when it comes down to trading. And it's not something you want to rush, because let's say you rush and you blow your account. It can be dangerous for you and you have no capital to get back into that market and place trades and this, that. So it really sucks, honestly. You want to really be careful of what you do, how you place your trades, and just know not to be greedy, I would say. Like, always be patient with the process. Next one I put here is never do revenge trading, because gosh, literally, if you're a new trader, you will know blowing your account is the worst thing you can do. There's times where I've blown my account and the first thing I'm thinking is, how the hell am I going to make this $160 back? How am I going to make this $200 back? Oh, what? I literally just blew my account to $0. Let me go ahead and make another deposit, and I'm going to make sure I get on this sale and capitalize from this. And it doesn't work that way. So the psychology with revenge trading is basically, it's your psychology is going to be off, your analysis is going to be off. If you get into the market too quick like that and you didn't analyze, you don't see what's going on, your motive there is to make your money back, you can literally just blow that new deposit you just entered. So it's so important that you try to stay away from revenge trading, because it can only be detrimental from that point on. There's a reason you blew your account. So why not figure out the reason as to why that happened first before trying to make a deposit and make your money back? Because you're going to make your money back in Forex. If you know what you're doing, if you have a strategy, you'll make it. But the thing with revenge trading, it doesn't give you enough time to figure out, oh, this is why I blew the account. Oh, this is what happened. You're just placing a trade, going in it and thinking that, okay, this is going to work and I'm going to make all my money back. Sometimes that happens. But for me, whenever I blow my account or something, I don't trade till the next day, or I probably give the market right about 2 to 3 hours to really determine what the trend is and what it's doing. Do my analysis, then I get right back in, and then I make my money back. So that's a beautiful thing there if you're patient enough to do that. But some people are not patient when it comes to trading. They want to make all of their profits that they lost back. The next thing I wanted to place here was basically just to, sorry guys, I'm having a little bad hair day. The next thing I wanted to place here was just never do a revenge trading ever. Never do revenge trading. Oh, I think I already went through that. The next thing I wanted to place, stay here, my next rule was holding trades. You do have to hold trades in order to make money. Literally guys, I was like yesterday's old. Well, not yesterday, but like October 1st. No, September. September was when I was like, okay, I need to make sure I'm holding my trades, because it got to the point where I was blowing my account and not seeing profits. And I'm like, why am I not seeing profits? Like, what the hell? You know, I'm know where the trend is going. I'm placing the trends. Every time I place a trade, I see that I'm in the blue. I'm going up. Sometimes if I'm in drawdown, it's for like a minute or so before the market reverses and does the right thing and goes in the right direction. So why is it that, okay, I'm just not making as much profits? Like, you know, and then I realized, okay, you're just getting out of the market too early. You're not holding your trades, which is bad for you, because you're selling yourself short. You could have literally made $1,000, made all your profits that you needed, you know, but you decide to see $80 and close it. And it's like, dude, you know, you're just wasting your time at that point. So I had to really talk to myself about that and realize, like, it wasn't that I didn't want to take all my profit. The issue was that I get scared. You know, there's people that are traumatized by blown accounts. You know, imagine putting $600 into your account and the next day or within 5 minutes, you know, your account is blown and you have no money in your account. Come on, you're not going to say, okay, hey, I'm going to go ahead and hold the trade and do this. Because sometimes I've been in that position where I've placed a trade, I've been in drawdown. Literally, I'm looking at my account go to like 600 to right at 500, and I know I'm going to get a margin call. I know my account's going to be blown. And literally, I just stick it through. I hold it. I say I'm not going to go ahead and close. And whenever I make that decision, it's so stupid because it blows my account. Literally, I will never forget the day I blew $600 in 5 minutes. I was so angry, guys. So that's part of just the reason why I'm not saying I'm scared of it, but I know now there's a different strategy to go about holding trades and making more money. Yeah. And then the next thing is, let's see here. I put here that I was going to trade on Sundays from 7 to 9 because the market's not too bad on Sundays. I've made at least $3,000 on Sunday when I was trading previously. So it's not as bad if you know what you're doing. So, but yeah, I'm trying to think about that. I'm not exactly sure because that kind of goes against my 8:30 to 3:30 rule. And I don't trade anything that's like outside of New York session. So it's an exception that I'm trying to make and see if it works. The next one is wait for extra confluences and confirmation before taking a trade. So with that being said, that basically just means wait for extra signs, you know, that you need to take a sell or take a buy. So wait for the 5 minutes to align with the 1 hour before putting a trade. So once you see the 5 minute, it's literally going in that direction. It's creating that bullish candle and you see your 1 hour is doing the same thing. prepare to enter in for a trade. So that's just what it means, waiting for extra confluences and confirmation before deciding to risk your account and place a trade. Next thing we're going to discuss here, or my next rule here, is never ever trade indices before the market opens. And the market opens right about like 9:30. That's what everyone says, but at 8:30 it's open as well. So I actually try to avoid being in the market at 9:30, because 9:30 I have had situations where my account has been blown and just out of the park. So I try to not be in the market. What that comment meant to say was, do not trade indices before 9:30, like, or around 9 to 9:30. I always try to get out right at 9 o'clock, because the market is really, really crucial and mean and evil when it comes to 9:30, because the market's just opening up. So you really don't know what the market will do. So it's just important to not trade before 9:30. So I think I know that already. Appreciate your wins. You have to be appreciative. If the market gives you 10,000 for a trade for that day, take it as a blessing and get out, because there's some people, and what I try to do for like my whole not to be greedy strategy is just take it as it is, and I try to think about society like, oh my God, how many people out there make $10,000 a day? Come on. So that's what I try to think of whenever I'm trading. Like, don't be so greedy. Don't try to overdo it, and try to see if you'll see a $20,000 day or $50,000 day. Take your money and exit the market. Actually do a withdrawal. Do a withdrawal, because what I've seemed to notice is whenever I leave money in my account, I increase my lot size, I do the wrong thing, and I miss out, and I blow the account. So that is the worst, most dangerous thing a trader could do, is not doing your withdrawals as frequently as you should, trying to exponentiate your tradings and make it go a long mile, and not doing enough analysis. Like, I feel like for people that want to increase their lot size, you have to do additional extra analysis on the market before you just go ahead and put like a $1 lot size or $2 or like 50 standards, or all those kind of big numbers on a trade, not knowing if this is going to go in the right direction or not. So, and that's the risk you take with trading. Trades are always going to be risky, whether you like it or not. So that's what I always put there. Appreciate your wins. The market is not always going to do what you think it's going to do. So if you already know that, and you just shouldn't be in the market at certain times. So appreciate your wins. Next thing is know the trades overall. Know the trend overall direction. I don't know what I meant there. But yeah, know where the Forex market is going. Know the trend. Is the trend going up? Is the trend going down? There's times where the trend can be going up, but then it consolidates down and then it goes right back up. So that would tell you that is a upwards trend. So there's times where I was just really confused about that. I was like, well, if it did this big jump all the way up, but now I'm showing it's consolidating down, so should I just take a sell? And then it's like, oh, then it shoots back up, and it's like, oh my God, okay. So that is also what helped me to blow my account, which I'm very pissed off about. Next one is never counter trade. Counter trade is like basically when the market is going in a bearish direction, like say it's going down and you're looking for buys. I mentioned this in a previous video. This is one way to blow your account. If you do want to go and look for buys in a selling market, short term, temporary, you have to be slick in and out. You have to have the tightest stop loss, tightest take profit, and you want to know when to get the hell out of the market, because staying in the market can literally blow your account if you don't know what direction is going in. Next one is don't trade nights. And guys, there's so much controversy with this one. I have chosen to never trade nights because it's literally after Asian session, I always see the market change, and it's not till like London session at 3 o'clock to where the market's really doing what it's doing. It's going in the right direction. So just keep in mind with the sessions, each session has a certain direction it's going to go in, you know, so follow that direction for 8 hours, literally. You know, and don't do the opposite thing. So that's the thing, that's where I've always been confused at, because after trading New York session, I go right into Asian session thinking, oh, we're going to be in the same trend. I don't do enough analysis, and trading overnight, like just placing a trade and going to sleep, I would wake up to a blown account, like it never fell. So I avoided that. I always try to avoid that all the time. So yes, guys, that is my trading plan for my Forex journey. Let me know what you guys think about my trading plan. And yeah.